You're listening to AI Prism from Seoul Economic Daily.
The hashtag KOSPI hit an all-time high today, but nearly 80% of stocks actually fell. Margin loans are at absolute record highs, and an automated leverage loop is essentially driving the entire market. It's Tuesday, June 2nd. Here's what investors are watching in Korea today.
Yeah.
So in today's deep dive, we're pulling from the Seoul Economic Daily's market reports to untangle a massive contradiction. How exactly does a market hit a record ceiling while almost everything inside it is basically sinking?
That's wild.
Right? Let's just look at the numbers. The hashtag KOSPI closed at a record 8,788. Yet, out of 934 stocks, only 183 went up.
Just a tiny fraction.
Yeah, and foreign investors dumped 2.92 trillion won. That's roughly 2.09 billion US dollars. That marks their 17th consecutive session of net selling. So foreign capital is fleeing and the broader market is bleeding. What is actually powering this index?
Well, it really boils down to a massive algorithm-driven leverage engine, and it's focused entirely on just Samsung Electronics and SK Hynix.
Just those two?
Pretty much, yeah. Individual investors are, they're pouring capital into single-stock leveraged exchange-traded funds. So these are ETFs strictly designed to deliver exactly 2 times the daily return of those specific underlying tech stocks.
Okay, let's unpack this, because this sounds exactly like an audio feedback loop.
Right.
Retail investors buy the 2X ETF, which literally forces the ETF managers to automatically buy the underlying Samsung or SK Hynix stock, right? Just to maintain their exposure ratio.
Exactly. They have no choice.
So that forced buying drives the stock price up, which makes the ETF rise even faster, which, that just attracts more retail buying.
Yeah, but imagine if that audio feedback loop kept getting louder and the sound engineer just couldn't reach the volume dial.
Wow.
That forced buying frenzy is so intense that the Korea Exchange has actually had to trigger its sidecar 11 times this year.
11 times? Wait, what exactly is the sidecar again?
So a sidecar is Korea's program by, quote, suspension. It activates when KOSPI futures deviate more than 5% from the previous close for just 1 minute.
Oh, wow. 1 minute.
Yeah, it temporarily pauses all program-driven buying just to let the market cool off, to break that reflexive buying.
Okay, so all this ETF money is blindly vacuuming up Samsung common stock to feed the algorithm. But, what happens to the stocks that the algorithms are programmed to ignore?
Well, that blind spot is creating these historic distortions in preferred shares.
Right, the preferred share discount.
Yeah, we're seeing a severe preferred share discount. So preferred shares give you higher dividends, but they carry no voting rights. And more crucially for today's market, they lack KOSPI 200 index inclusion.
Because the algorithms only look at the index.
Precisely. Because ETF algorithms are strictly programmed to track the KOSPI 200 benchmark, they literally only have eyes for common shares. Preferred shares could offer, the best dividends in the world.
But they're invisible.
Right. To the ETF robots, they literally do not exist.
And that algorithmic blind spot is showing up in the math. Samsung's preferred discount just hit 34.4%. That is more than double its 10-year average. All that ETF capital is completely bypassing them.
Yeah. Which brings us to probably the most critical layer of this deep dive. This incredibly narrow, tech-heavy rally isn't just distorted. It is built on a foundation of unprecedented debt.
The margin loans.
Exactly. We're looking at historic levels of credit trading loans. This is the retail margin borrowing individuals use to buy stocks. That balance just hit a record 38.02 trillion won.
Which translates to roughly 27.16 billion US dollars.
Massive, right. And on the institutional side, securities firm collateral borrowing, where brokerages basically borrow against their own assets, that hit 15.4 trillion won, or about 11 billion US dollars.
Okay, wait, I have to stop you there. If you're an investor looking at this, doesn't this entire structure feel incredibly fragile?
Very fragile.
We have 732 stocks dropping, foreign money fleeing for almost a month, and retail leverage maxed out at over $27 billion. If Samsung's upcoming Computex announcement even slightly disappoints, isn't this entire house of cards just going to collapse?
Well, that is the exact mathematical danger here. Leverage engines work in both directions.
Right.
If foreign selling continues and a disappointing catalyst breaks that automated bid, the downward unwind of that 38 trillion won in margin debt wouldn't just be a standard correction.
Or would feed on itself.
Exactly. The forced selling would accelerate the drop just as fast as it drove the rise. It leaves you wondering, When a single tech event in Taiwan can potentially unravel $27 billion in Korean retail debt,
Yeah.
are we even investing in companies anymore or just placing bets on algorithms?
That's today's AI Prism Markets Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN-AFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.